Hello, everybody. Timothy Knight here, Slope of Hope. That's not me on your screen, though. This is the, I guess, scruffier Bernanke, maybe in his pre-chairman days. Boy, look at that neck. Goodness gracious. Looks like needs a four-blade Gillette or something. Anyway, he's tidier these days. But this man, of course, was the big focus today, not only because of the FOMC announcement, which basically said the economy is not doing that great, but it's kind of coming along and we'll keep an eye on things. But the press conference, which actually caused four more market dynamics, I was astonished at how little the market moved at the FOMC announcement. But when the press conference happened, he, relatively speaking, actually said some pretty interesting things. Not the least of which was over and over kept saying, this isn't August of last year. That sort of code for they're not dying to come up with QE3 anytime real soon. He's basically seems to be saying that deflation isn't the risk it was back then. So that kind of caused an interesting sell-off. Here we see over the past 60 trading days, back from the tippity-top peak, back when bin Laden was captured, of all things, inspired the top, have been in this wonderful descent with some scary ascents. One was here back in late May, and the latest was just over the past week or so. And as we zoom in to this portion, and let's make this tighter still, a little more finely granular. Ever since Sunday, we've just been the bulls have been enjoying this little ride here. And today it looked like it was going to kind of push higher still. And then, honestly, right around here, there was a question posed about, more asset purchases. And that's what he kind of made his, well, this isn't August anymore, things are different now, statement. And I think it began to dawn on some people that QE3 isn't going to happen anytime in the next few days. So we got this nice, 12, 13-point sell-off here. Kind of a good way to close the day. Now, I haven't known, nor do I know, how long or how high this counter-trend rally lasted or will last. Simply stated, I think there are two possibilities. Possibility one, which I hope is the case, but I'm not holding my breath, is that just the past few days have exhausted the pushback by the bulls. I really, really hope that's true because I'm mostly in shorts. But the other possibility is that it push to kind of the 1330-ish kind of level before sort of falling to pieces. Now, my measurement for this really is my individual stocks. I still have 157 individual stocks that I'd like to short, but at higher prices. And the oomph that they've got left in them sort of suggests there might be more upside. However, I've got 75 current shorts and 16 longs. All 16 of my longs are in the red, so I'm not real happy about that, but that is kind of the price you pay for being hedged. They're all pretty recent positions, and they fall into a couple of broad categories. Category one are those items that I think are basically screwed, but might have some kind of bounce left in them. Here's AAP, here's AXS. Again, these are just bounce plays. They're just so battered that I think there's a possibility of them moving higher. Here's BK. None of these are like beautiful patterns. DWA, again, very battered. This might move from like 21.5 to like 24.5 or something like that. GLBL. So that's category one, sort of bounce plays, which if they move could be substantial. The other one are actually honest to goodness, good long patterns that I actually like. ADI. Here's what I've got to post in the hopper for BEE, on the cusp of a breakout there. CKH. So you can see the difference here. These are things that actually you can make an argument for them being long-term holds. There's DF, SOLR. This one I really like, SOLR. And by way of example, I unfortunately don't own this one, but even in an environment like this, there are stocks that are in good patterns that act accordingly. Here's ZAG up nearly 20% today. I think it kind of tipped its hand by being so strong in the face of the sell-off the past couple of months. So this thing's just been gorgeous. I don't even remember what they do. Are these the guys that make covers for iPads or something? I don't, because at first people were freaking out that they were doomed, but this stock's doing great. Now, as far as indexes go, this again goes back to my, are we done or are we going to move higher camp? The CompQ, for example, the NASDAQ Composite, this did a beautiful job pushing all the way up to that gap fill right there. I mean, absolutely gorgeous. I would love it if that was the line in the sand and it started falling away from that trend line. That would be wonderful. It would kill all my longs, but that's okay because I'm mostly short. The other possibility is that the bulls kind of shake things off and move higher to, I don't know, 2,800 plus, something like that. Could happen. That will require a lot more patience on the part of folks like me. So honestly, I really think that it's one or the other, and I'm not sure which. That's why I do have longs and why I'm still not going bonkers. I am much more committed than I was yesterday. Yesterday I was committed like a mere 36%. Today is 90%. But I emphasize again, it's a mix of longs and shorts, mostly shorts. Here's the Dow. These are all very similar. They've all broken big ascending trend lines, and they've pushed up to what could be the end of their retracement, but I just don't know. A real beauty today that I actually shorted via IYT is the Dow Transports. This is a super duper long, God, as long as back to FDR, 1932. Fibonacci fans, really fascinating. Just, I mean, to me, this is what makes technical analysis just so electrifying. Seeing something like this is 80-year-old pattern still holding sway. But it kissed the bottom of this fan line here, and I shorted it today. Also, for you candlestick folks, a very nice shooting star pattern there. So I shorted a lot of IYT. Again, that's the transports, which were aided by FedEx's good earnings. So made it a pretty good price. Now, my perennial favorite, GDX. I am short this again, and actually am short as of now because sometimes used for day trading, sometimes actually hold it. Pretty tight stop on this. 55.51 is my stop, essentially the high from June 7. If it starts falling, especially if it dips again beneath that 52.46 price level, if this starts falling, it could be spectacular. This is a really nice topping pattern. But it needs to weaken here. It needs to weaken almost right away. But this one could be just really exciting. In the world of real estate, I had mentioned DRN, if you can find any, as an interesting short. This fell 1% today. Another nice shooting star there. Very nice broken wedge. A little less radical is because this is a triple bullish one. XHB. We see here again a trend line which was broken and has been retraced, and we're still underneath that trend line. Very nice pattern there. I would short JNK if it didn't have that huge dividend. This is a very pretty pattern. This is the high yield bond ETF JNK, but this thing pays like a 8.5% yield. And which if you're short it, you have to pay it. No thanks. So not interested. But it all comes down to the dollar. Here's sort of the US dollar, which is in kind of this funny symmetrical triangle pattern going on here. Really doesn't know what to do with itself. Clearly the chaos in Greece and the uncertainty about that weighs very heavily on, what's the euro going to do, what's the dollar going to do. It's encouraging, though, that the good news, in quotes, for the euro has really been not that helpful in the past 24 hours. So that's it from me. Kind of sums it up. Oh, and if you've gotten this far, you're probably a good sloper. You know you need to click some ads. Of course you do. Otherwise, I'm going to put Bernanke's face on every post from now on. None of us want that. hide the children. Well, God bless you, and I will see you later. Bye.